Hello everyone, welcome to this week's lecture. So this is the second part of chapter 5. We will learn about cost classification and its behavior. So in this chapter, there is some repetitive items that we have learned in the last lecture, but we will go through it quickly. Okay, so in this chapter, I would like you to identify and distinguish each type of cost and then classify it according to their function, behavior, and tracing method. And then I would like you also to focus on how to segregate mixed costs using what we call as the high and low methods. Okay, so let's start. Cost accounting system provides useful information related to the cost of the product or services for management in decision making. The cost information is used as a control and tool for the management to measure the performance of each department and the employees of the organization. So we have covered this last lecture, whereby we know that cost information is very important for performance review, not just for the department, but also to the whole organization and also to respective individual employees of the organization. And then the cost accounting information is also very important to help management in planning their budget. This budget will be done annually, therefore they will need to know the total cost of each department so that they can forecast their sales projection and therefore can predict the profit that they will be able to obtain in that year. Also, the cost accounting information helps the company to make decisions based on factors of production such as type of product, quantity to produce, and method of production. So I have given an example of whether a company should buy nails or manufacture their own nails when they are trying to build their furniture as their product. Okay, so cost accounting information actually help the management to make that kind of decision. Okay, so there are several methods to classify costs, and we can generally classify them into three main categories, which is function, behavior, tracing, and allocating. Okay, so let's look one by one. Classification of costs according to function, we actually have covered this in the last lecture, therefore I'll just go through with this very quickly. Manufacturing cost is also considered is also called as inventoriable cost or the product cost. And manufacturing costs involve direct material costs and direct labor costs, which is also categorized as the prime cost. So prime cost here means the cost that comprises all direct costs. Therefore, if the costs are all direct, there will be fall into the category of prime cost. And then the second cost is conversion cost, which are the costs used to convert raw materials into finished good. Therefore, direct labor cost plus manufacturing overhead cost is considered as conversion cost. And then lastly, manufacturing overhead costs are costs of other than raw material and direct labor that are used to determine the product value and inventory, such as salaries of factory supervisors, salaries of account clerk, factory clerk. Sorry, account clerk is not under manufacturing overhead costs. Okay, salaries of those employees that is related to the production of the product, and then rent and utilities of the factories. So these costs can be considered as manufacturing costs. Okay, so as you can see here, direct material plus direct labor is prime cost, and direct labor plus manufacturing overhead is conversion cost. And then another function is cost of goods sold. How to calculate cost of goods sold is opening inventory plus manufacturing costs, which is the direct material plus direct labor plus manufacturing overhead cost just now. And then you will minus with the closing inventory of the finished goods. So these are the equations to calculate cost of goods sold. And then non-manufacturing costs are also known as period costs. We have also learned this from the last lecture. it includes the distribution costs or marketing costs, such as the sales commission of the salesperson and the advertising costs of advertising the product. And then it also includes general and administration costs, such as salary of administration staff, such as account clerk salary, admin clerk salary, and also the depreciation expense of office furniture. Okay, so office here is different from the factory, because office is a building that is used by the marketing and administrative department. However, for factory just now, the building is considered directly related to the production of the product. Therefore, any related expenses for factory, which is related to the production of the product, will go under the manufacturing overhead cost just now. Okay, so let's look at very quickly what is manufacturing cost. So our product is a car here. So it has to, so we need direct materials, direct labor, and manufacturing overhead in order for us to produce the car. Okay, so raw materials is an integral part of the product and can be conveniently traced directly to it. So for a car here, you know that a radio will be installed in an automobile, so therefore it will also be considered as raw material. And then as you can see here, the steel building, the steel to build the car, the tires, and then the glass for the screen as well as for the window is direct material, because you can directly trace it, you can directly see it. And without a tire, without the steel, without the glass, you won't be able to build a car. Okay, so for direct labor is any labor cost that can be easily traced to individual units of product. So for example, here is the wages or salaries paid to the automobile assembly workers. So this is the worker, and he needs to assemble all of these raw materials such as the steel just now, tires, glass, and the radio just now, to assemble it all together. Therefore, it can look like a car. So that is considered as direct labor, because he is directly touching and directly building the car. And then manufacturing overhead are the costs that cannot be traced directly to specific unit produced, which consists of indirect materials and indirect labor. So indirect materials are material used to support the production process, such as the lubricants and cleaning supplies used in the automobile assembly plant. So similar to last week lecture, whereby the lubricants for the machine is considered as indirect material. So same goes to this example as well. And then indirect labor, wages paid to the employees who are not directly involved in production work, such as the maintenance workers, janitors of the factory, and security guards of the factory. So therefore, it is considered as indirect labor, because they are still involved in the production work, but they do not actually touch, okay, and build the product on their own with their own hands. Okay. And then for non-manufacturing costs, it is divided into two. One is selling costs, and the second one is administrative costs. So again, the selling cost is needed because we need to secure the order and deliver the product. So it is useless if we build a product but then we cannot sell it. Okay, so we need to incur selling costs. And then administrative costs are all executive, organizational, and clerical costs, such as the admin, HR admin clerk, okay, the clerk who will manage all employees in the organization, and then also finance clerk, accountants who will be doing the accounting records and so on. Okay, so we need to distinguish as well between product cost and period cost. So it's easy. Product cost is manufacturing cost just now, which includes direct labor, materials, direct labor, and manufacturing overhead. While period cost includes two, which is the cost and administrative costs. Selling cost and administrative cost. Okay, so product cost is equal to manufacturing cost. Period cost is equal to non-manufacturing cost. Okay, so why we need to distinguish these costs into two categorization is because product cost will go into two different financial statements, which is the balance sheets, okay, which is under the account inventory, and also the information will go to income statement under cost of goods sold. Okay, and then for period cost, it will go under expense, which is it will go to the income statement. Okay, so you can try to read this question and try to attempt to answer it, and the answer is already been given here. Okay, so which of the following costs would be considered a period rather than a product cost in manufacturing company? So you need to understand a period cost is non-manufacturing product. Therefore, manufacturing equipment depreciation is considered manufacturing overhead cost. Property taxes on corporate headquarters means this is an admin building. Therefore, it is a period cost under the administrative expense. Direct material to cost is manufacturing cost, which equals to a product cost. And electrical cost to light the production facility is manufacturing overhead cost, which goes under product cost just now. And then sales commission is under selling cost, which is under the period cost just now. So the answer is B and E. Okay, so the second one is to classify costs according to its behavior. Okay, so there are three categories. Cost behavior refers to the situation where costs can be changed if there is a change in output or activities. So it means here, cost behavior reflects to a situation where costs can either increase, remain the same, or decrease if there is a change, whether it is increasing, maintaining the same, or decreasing in output or activities. Okay, so we'll look into that later on. There are three categories. One is fixed cost, second is variable cost, and the third one is mixed cost. So fixed costs are costs that remain constant, although there are changes in output or activities in a given relevant range. Okay, and then second one is variable costs, costs that vary according to variation in the unit of output. Meaning to say, if the output increases, then the variable cost will also increase. If the unit of output decreases, therefore, the variable cost also decreases. However, for fixed costs, if the output increases, the fixed cost will remain the same at a certain relevant range. Okay, and then for mixed cost, it is a combination of the first and the second cost just now, whereby it is also known as semi-variable or semi-fixed cost. So it has a portion of a fixed cost as well as a portion of variable cost. Okay, so this is an example of variable cost. Your total taxing bill is based on how many tax you send. Okay, so before this, before they created a mobile phone plan that costs you a fixed fee monthly. Okay, the older mobile plan is charging per text. Okay, meaning to say, the more text messages that you send, then the more bill that you have to pay for that month. Okay, so when it is back to 2010 2005, okay, let's say I buy a phone and plan in 2005, Therefore, it charges me. If I want to send a text message to one of my friends, it will charge me one message 5 cents. Okay, so if I send 2 text messages, then I will incur 10 cents of bill. Okay, so let's say, okay, so meaning to say that if I send 100 text messages, therefore I will incur 5 ringgit bill for that month. Alright, so this is considered as variable cost. The more number of text messages that you send, the higher the bill that you have to pay. However, there is another way of looking at it, variable cost per unit. Okay, so this one is a total variable cost. But for variable cost per unit, the cost per text sent is constant at 5 cents per text. Okay, meaning to say that if I send 1 messages here, the cost will be 5 cents. If I send 100 messages here, the cost per text remains at 5 cents. Okay, so please remember and don't be confused with the graph here. This is cost per text sent, meaning to say an individual cost for one message. Okay, therefore, if you send 1 message here, 1 message equals to 5%. If you send 100 messages here, 1 message still costs you 5 cents. But for variable cost here just now, so here is the keyword, it is the total texting bill. Okay, so this is a total cost that you have incurred for the whole month, not for an individual text messages. Okay, so this one is individual cost per text sent. Alright, so these are the examples of variable costs. In merchandising companies, companies who just buy a product from the suppliers and resell it back to the market. So it is the variable cost is cost of goods sold. Okay, the more products that they sell, therefore the higher the cost of goods sold in merchandising company. For manufacturing company, variable costs are direct materials, direct labor, and variable overhead. Okay, so we'll look into this later on. Merchandising and manufacturing companies, commission, shipping costs, and clerical costs. Okay, so this one, selling costs. Okay, as you can see, these are the example of selling costs. So the more product that you sell, therefore, the higher the commissions, shipping costs, and clerical costs for invoicing the product just now that you will incur. And then for service companies, supplies, travel, and clerical. So these are the example of variable costs. Okay, so what is true variable cost? True variable cost is a cost used during the period that varies in direct proportion to the activity level. So by using the example of the cell phone bill just now was one example of a true variable cost as well as a direct material. So what here means is true variable costs are the one who has these relationship in a graph. Okay, so that is what we call as true variable cost, a direct proportion to the activity level. Okay, if the volume increases, the cost will increase no matter what. So that is the definition of true variable cost. Okay, so let's say you are using 5 messages here, your cost will be at this level. If you are sending 100 messages here, so your cost will be higher. No matter what, it will go higher and have this direct straight line in the graph. So that is true variable cost. Step variable cost is another type of variable cost. However, it's a bit different, whereby you can see an increase in the graph as well, but not in a straight line like this. Okay, but it still shows you an increasing trend, but not directly straight from the point of 0 until here. Okay, so this is what we call step variable. It is still varies according to the volume, and then there is some straight line here in between of these activities. Okay, so a step variable cost is a resource that is obtainable only in large chunks, such as maintenance workers, and whose cost change only in response to fairly wide changes in activity. Okay, so let's say if you are producing 1,000 volume of product, you need only 2 maintenance worker. Okay, so meaning to say that as long as you producing below than 1,000 products, therefore you only have to hire 2 maintenance worker. Let's say if the salaries of 2 maintenance workers equals to 3,000 per month. Okay, so if you are producing 500 products here, your cost of maintenance worker will be at 3,000. But if you are producing 1,000 products here, your salaries that to be paid to the maintenance worker still remains at 3,000. So no matter how much you are producing within this relevant range of 1,000, your cost to hire maintenance worker will be at 3,000. Okay, so the cost will only incur if you are producing more than 1,000, which is this one is 1,001 until 2,000 product. You need to add more another 1 maintenance workers. Okay, so if you are producing 1,500, so you will increase another 1,500 for the maintenance worker, the additional 1 worker. So your cost will be at 4,500 here. Okay, if you are producing 1,800 here, your cost will be also remaining at 4,500. Okay, but if you are producing 2,100, therefore the cost will increase to the next step. Okay, which means you need to add another 1 additional worker here. So 2 maintenance worker here, 1 plus 1, which is 3 maintenance worker here, plus another 1, so 4 maintenance worker here. Okay, so if you are producing 2,200 or 3,000, you still need to incur 6,000 ringgit in the maintenance worker. So this is what we call as step variable cost. It has a certain relevant range, and if it exceeds the certain relevant range, therefore then only the cost will be higher. Okay, so small changes in the level of production are not likely to have any effect on the numbers of maintenance workers, okay, as long as it maintains within the relevant range, okay. If it already exceeds from the relevant range, then only the cost will increase at this level, okay. Only fairly wide changes in the activity level cause a change in the number of maintenance workers employed, okay. Like the one that I mentioned just now, 1,000, maximum 1,000, maximum 2,000, maximum 3,000. If there is an increase of 1,000 volume here, then only the cost will increase. Okay, so let's go to the second part, which is fixed costs. So this is applicable to what we have currently, especially if you are using postpaid plan. Okay, your monthly contract fee for your cell phone is fixed for the number of monthly minutes in your contract. The monthly contract fees does not change based on the number of calls that you make. Okay, so let's say like right now, my monthly contract fee is 100 ringgit per month. So it gives me an unlimited number of units of phone calls. So if I only call a person for 10, if I only call in a month using 1 hour, therefore I still have to pay 100 ringgit. But then if I call in a month more than like 30 hours, okay, so I still need to pay the same 100 ringgit just now, no matter how short minutes that you have used or longer minutes that you have used within the month, you still need to pay 100. If you don't call anyone in the month, or if you call so many person in a month, you still need to pay 100 ringgit. So that is what we call as fixed cost. Okay, so this fixed cost is a total fixed cost in a month. Okay, and then looking again at fixed cost per unit. Okay, when we say per unit here, so this is an individual fixed cost per unit. Okay, within the monthly contract allotment, the average fixed cost per cell phone call made decreases as more calls are made. Okay, for fixed cost per unit just now, if the number of minutes that you use in a month is higher, therefore the fixed cost per unit will decreases. Okay, so you need to understand there is a different relationship between the total cost versus fixed cost per unit. Okay, if you are looking at a total fixed cost will show you a straight line like this. But if you are looking at fixed cost per unit, it will go curve down to the graph as illustrated in the slide like this. Okay, so for example, you pay 100 ringgit per month, and then these are the number of units you use. Okay, so let's say this is 100 units. 100 minutes, and this one is 200 minutes. All right, so at 100 minutes, okay, you divide with 100 ringgit divided with 100 minutes just now. Okay, so 1 minute equals to 1 ringgit. All right, but the more you use, okay, if you use 200 minutes, you divide 100 ringgit with 200 minutes, so you will get 0.50 cents per minute. Okay, so the more minutes that you use, therefore the fixed cost per units will be cheaper as well. Okay, if you only call for 100 minutes, so 1 minute equals to 1 ringgit. But if you call for 200 minutes, therefore 1 minute equals to 50 cent. Alright, so fixed cost per unit decreases as the number of the minutes increases. Alright, so they have an inverse relationship. Alright, okay, so the fixed cost is not going to remain the same for the entire numbers of production. Okay, so fixed cost, the fixed cost will only be constant at the relevant range. So this is what we call as relevant range. The relevant range of activity for a fixed cost is the range of activity over which the graph of the cost is flat. Okay, direct straight line like this. Alright, so it means that if you are renting 200 square feet, you still need to pay 30 ringgit, 30,000 of dollars. Alright, if you are renting 500 square feet, you still need to pay $30,000. If you are renting 1,000 square feet, you still need to pay 30,000 of dollars. Okay, then it will increases, okay, a significant increase, which is 30. If you are renting at 1,500 square feet, it will increase 60,000 in dollar. Okay, therefore as you can see here, there is a doubling of the cost. Okay, the cost has been doubled, all right, over this relevant range. So this is what we consider as fixed cost. So the fixed cost, this is another example. Assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square feet. So the fixed cost would only increase in a step fashion for each additional 1,000 square feet, okay, as shown in the graph just now. So how does this step function patterns differ from the step variable that we have seen before? Okay, so step variable cost can be adjusted more quickly as condition change. Okay, and the width of the activity steps is much wider for the fixed cost. Okay, so it means that step variable cost, it can be adjusted more quickly if the situation changes, all right? But for the fixed cost, the width of the activity step is much wider. Okay, so let me show you. So this flat line is more longer as compared to the step variable cost just now. This one is shorter. Okay, so you need to see the graph. If the flat line is shorter, therefore it probably could be categorized as step variable cost. And if it is longer like this, it probably would be a fixed cost. Okay, so this is very important. I usually put this kind of question in the exam. Okay, so make sure that you have a very good understanding of the variable cost, the variable cost per unit, the fixed cost, and fixed cost per unit. Okay, so which of the following statements about cost behavior are true? Fixed cost per unit vary with the level of activity, which is true because if the level of activity increases, the fixed cost per unit also decreases. If the level of activity increases, the fixed cost per unit will decreases. Okay, so variable cost per units are constant within the relevant range. Okay, true, it means that no matter how much that you sending the text messages, the variable cost per unit of the text messages just now still remains constant at 5 cents. The total fixed costs are constant within the relevant range, which is true from what we have seen in the slide before this. And total variable costs are constant within the relevant range. No, okay, unless it stay here step variable costs. Okay, only step variable costs are constant within the relevant range. Okay, but for a total variable cost, it should be increasing if the activity level changes and also increasing. Okay. Okay, so this is the summary of it in total and per unit. So total variable cost changes as activity level changes. The higher the activity level, then the higher the total variable cost would be. And then for fixed cost as well, the total fixed cost remain the same even when the activity level changes, but within the relevant range. Okay, so variable cost per unit, it will remain the same, constant for a wide range of activity, and the average fixed cost will goes down as activity level goes up. Okay, so this one changes in variable in total changes, variable per unit constant, fixed in total constant, fixed per unit changes. Okay, so this is the summary of it. Please grab and understand this part. It's very important. Okay, which of the following costs would be variable with respect to the number of cones sold at Baskin Robbins shop? Okay, so it means that which are the variable costs? The cost of lighting the store will highly likely remain the same because they have an operation hour. Let's say they open 10 a.m. until 10 p.m. No matter how much cones of ice cream that they sell, the cost of the lighting will remain the same. The wages of the store manager as well, no matter how much cones are being sold, the store manager will have the same salary per month. The cost of an ice cream is a variable cost because the more you sell the ice cream, therefore the more higher the cost of ice cream that you need to have. And then the cost of napkins for customer as well is a variable cost because the more number of cones you sold, therefore the higher the number of napkins that you need to give the customer. Therefore the cost will also increases. Okay, so we will look into the the last part, which is the mixed cost just now in our next lecture video. Okay, so what is mixed cost? Mixed cost can be separated into variable and fixed cost by using 4 popular methods, but I will only teach you one method, which is high and low methods. Okay, so mixed cost contains both variable and fixed element. Okay, so this is the fixed element, alright, and then this is the total mixed cost. So for this flat line here, this is the fixed monthly charge that you will need to incur, and then this straight direct line, increasing straight direct line, is what we call as the variable cost. So if you include all of this, it equals to total mixed cost. Okay, so the total mixed cost can be expressed as an equation. Y is the total mixed cost equals to A, the total fixed cost, where the vertical intercept the line, okay, here, and then plus B times X, the variable cost per unit of activity times the level of activity. Okay, so for example, if your fixed monthly utility charge is 50 ringgit, your variable cost is 3 cents per kilowatt hours, and your monthly activity level is 2000 kilowatt hours. So what is the amount of your utility bill? So Y equals to 40 ringgit plus 3 cents times 2000 kilowatt hours. So equals to 100 ringgit. So it means that, okay, if you are so this is the 2000 kilowatt hours just now. Okay, if you are using 50 kilowatt hours, 100 kilowatt hours, 1000 kilowatt hours, 1500 kilowatt hours, or 2000 kilowatt hours, okay, you still need to pay 40 ringgit. Okay, and then there is an additional charges whereby they will charge 1 kilowatt hours at 3 cents, okay, per kilowatt hour. Therefore you will get the variable cost. So 40 plus 60, then you will get 100 ringgit for your utility charge. Okay, so this can also be explained by a mobile phone plan as well. Okay, so for example, I need to pay a fixed monthly fee of 50 ringgit per month, but it only give me 100 minutes free of charge. Okay, so if I only call in a month within not exceeding 100 minutes, therefore I only have to pay 50 ringgit per month. But let's say I have incurred more minutes, okay, 150 minutes or 200 minutes more, therefore I will need to pay the additional 100 just now. Okay, let's say they only give me 100 minutes free of charge, and then for this month I have incurred 200 minutes of phone call. Therefore, there is an additional 100, 200 minus 100 fee of charge just now. I need to pay for the additional 100 minutes that I have incurred. Okay, so let's say they are charging me 5 cents per 1 minute. Therefore, I will need to pay another 5 ringgit. Okay, so 50 ringgit is the fixed fee just now plus 5 ringgit of the additional 100 minutes that I have incurred. Therefore, for this month, I will have to pay 55 ringgit as my phone bill. Okay, so that is another example of mixed cost. Okay, so this is how you calculate the mixed cost just now using high and low method. The high and low method determines the equation of a straight line which connects 2 points, which is the highest and the lowest point. The highest point is the highest output or activity of an output or activity listed in a certain period. Therefore, the summary to determine variable rate and fixed costs is as follows. Variable cost per unit equals to changes in cost divided with changes in output or activity. Okay, so that is highest cost minus lowest cost is equal to changes in cost just now. Highest out divided with highest output minus with lowest output is changes in output or activity just now. And fixed cost, how do you calculate the fixed cost is by total cost minus variable cost divided with unit times highest output, or which is the highest point, or fixed cost equal to total cost minus variable cost per unit time divided with unit per unit times lowest output or the lowest point. Okay, so assume the following hours of maintenance works and the total maintenance cost for 6 months. Okay, from January until June. So the hours of maintenance have incurred are 625 until 850 here. The total maintenance cost of every month is listed here. Okay, so as you can see, the highest would be the variable cost of maintenance is equal to the change in cost divided by the change in hours. So 2,500 divided with 400 equals to 6 ringgit per hour. So this is the variable cost per hour. So the highest point here will be 1,850, which is in June. Okay, so the total maintenance cost is 9,800, and the lowest point is 450 in February, which equals to total maintenance cost of 7,500. So you minus 850 minus 450, then you get 400, and the total maintenance cost 9,800 minus 7,400, then you will get 2,400. So 2,400 goes here, the total cost, divided with the change of activity of 400, then you will get $6,000 per hour. So that is the variable cost. Okay, so the total fixed cost is total cost minus total variable cost. Okay, so 9,800 you can use whether you want to use the high information or the low information. Okay, but make sure if you are using high information, use the total maintenance cost for the highest point and also use the hours of maintenance for the highest point. Okay, so 9,800 minus 6 hours times 850 hours just now, then you will get 4,700. Similar, if you want to use the low one, 7,400 minus 6 hour times 450. Okay, then you will get total fixed cost 4,700. So the cost equation for maintenance will be y equals to 4,700, which is the fixed cost just now, plus 6 ringgit, $6 times x, which is the variable cost per unit. Okay, so you can look at this later on. Alright. Okay, so the second classification of cost is the last classification of cost is to tracing and allocation. So this one we have covered it also, direct costs and indirect costs. So direct costs are anything that can be traced to a business activity, such as direct labor and direct material just now. As long as you can trace it, as long as you can see it on your own eyes on the product, okay, therefore it is considered as direct cost. Indirect cost is considered as indirect material and indirect labor, as well as manufacturing overhead costs just now. Okay. Okay, the last one would be the relevant and irrelevant costs. Okay, so irrelevant costs are any future costs which could vary from one alternative to another and act as a basis for decision making. Okay, therefore the cost differs with the change of alternative. Irrelevant costs are costs which do not differ between alternative and are not considered in decision making. This is called as sunk costs. Okay, so opportunity cost is considered under relevant cost. Okay, any relevant cost that will influence you, okay, to choose one option to another option. But irrelevant cost, meaning to say this cost will not influence you to make any kind of decision. Okay, for example, irrelevant cost is opportunity cost, the potential benefit that is given when one alternative is selected over another. Okay, let's say if you were to decide not to attend college, therefore you could be earning and working, earning 15,000 per year. Therefore, your opportunity of attending college for 1 year is $15,000. It means that if you attend college, therefore you will lose the opportunity to obtain 15,000. But then if you don't go to college, you could actually get 15,000 per year as your salary. Okay, so that is considered as opportunity cost. Sunk costs are costs that have been already incurred, that already been incurred and cannot be changed now or in the future. These costs should be ignored when making decision. Okay, for example, you bought an automobile that cost 10,000 2 years ago. Okay, the 10,000 cost is sunk because whether you drive it, you parked it, trade it or sell it, you cannot change the 10,000 cost. Okay, so this has been incurred, therefore it shouldn't be in your decision making. Alright, so here, suppose you are trying to decide whether to drive or to take the train to Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the cost of the train ticket relevant in this decision? In another word, should the cost of the train ticket affect the decision of whether you drive or take the train to Portland when you have an ample cash to do so? Alright, so yes, the cost of the train ticket is relevant. Okay, because you don't want to waste money, and then even though you have enough money to drive or to take the train, but then you said here you don't want to waste money needlessly. Therefore, the cost of the train is relevant. Okay, so you can look to this another example. Okay, so the last one is, suppose that your car could be sold now for 5,000 ringgit. Is this a sunk cost? No, it is not a sunk cost because this 5,000 is the potential price for future. Okay, so that you can sell the car. Therefore, it has not happened. It hasn't been incurred. Therefore, it is still a relevant cost, not a sunk cost. A sunk cost is something that has been paid or incurred in the past. Therefore, it's not relevant in the present and future times. Alright? Okay, so that's all for this week. I hope that this lecture videos helps you a bit. So don't forget to submit your tutorial on time, as well as please log in to the attendance link that has been given to you. Okay, so don't forget to log in into that, and then also don't forget to attempt and submit your tutorial for this chapter. Okay, so please be informed that we will have no lecture and no tutorial for next week. Okay, so this is week 7 and next week is week 8, so we will have our midterm test in week 8, which you can start answering from Monday until Friday next week. Okay, so please log into Smart3 to answer the midterm test. Again, I would like to highlight there will be no lecture and no tutorial for next week. Okay, thank you very much.